Hello, YouTube. Justin here. Aren't these bulls resilient? When we did the weekend review, everyone was saying that we're going to need to have more liquidity for the market to go higher. We actually got the exact opposite. And why? Well, Jerome Powell told us today that he's actually ready to raise rates faster if needed, not slower, faster. He also talked about multiple 50 basis point hike meetings if needed. This is extremely hawkish. And what happened? We closed down by 13 cents. Who cares? 13 cents. And then finally, we're going to talk about Tina. There's no alternative. And we see that on the tape today with the bulls taking control. Let's jump in. We got a lot to go through. If you're enjoying the video, I would appreciate a thumbs up and drop me a comment, subscribe to the channel if you've not already done that. So what's important to note here is just that, again, we're going to go through and have a look at the charts, and we're going to look at the comments from Powell. Then we're going to go forward and see if there's any changes to our base case or anything else. Let's ask ourselves what the chart would look like if Jerome Powell didn't speak today. If we closed out down 13 cents and the dollar today was up by 0.28, would you say, oh my God, this is so bearish, we have to go lower? No, we'd be saying, wow, after the biggest weekly gain since 2020, we did an incredible job. We closed back above the 50 weekly after testing it, and we also closed above the 50 DMA after testing it. What does that mean? We have an established weekly low. Oh, it is that simple. We have an established weekly low, and if the bears were going to take control of the charts, they had two primary catalysts to do it today, actually three. The first one being Russia, saying that by saying there's war crimes being committed, we're severing ties, basically. We're getting ready to accelerate things. We're hearing about some visa requirements being put on sanctions for China. And then Jerome Powell gave us the big old 1-2 punch. And what happened? We closed down by 13 cents, 0.03%. Basically nothing. And again, biggest week since 2020, and we're basically digesting it with a very small range. I would also note here that the low that we put in the morning pretty much held off my key area. Previous top became resistance and then turned into support. That's a pass. Is it going to hold? I don't know. I'm not Nostradamus, but what this tells me is that the exact areas we would expect to find buyers and sellers, regardless of the headlines, the price action confirmed it. It's bullish. We also have a dividend being issued today. Look at that, $1.37. So is this related to the dividend? I don't know. There's always a reason to be worried. And as we climb that wall of worry, at certain levels, people get less and less scared. All right, now let's jump in and see what Jerome Powell had to say today to move the market. So what he told us is that the Fed is ready to raise rates faster if needed. If we conclude that it is appropriate to move more aggressively by raising the Fed funds rate by more than 25 basis point at a meeting or meetings with an S, we will do so. And if we determine that we need to tighten beyond common measures of neutral and into a more restrictive stance, we will do so as well. So what happened today is that the stock market and the bond market repriced the probability of a 50 basis point hike in May to roughly 67%, or 2/3 chance we're going to raise by 50 basis points at the end of the year. The last part is also what he's mentioning that, again, we know where inflation is. Again, according to the Fed, it's at roughly 3.8. Their terminal rate for the Fed funds rate is roughly 3 to 4% by this time, end of this year, end of next year. So that is still accommodative because inflation's a little bit higher than where the projected fund rate's going to be. What Jerome says is that if inflation's 4, we might take it to 5. This should have been the silver bullet for the bears to tank the charts. And they did temporarily. And then we immediately reversed. So let's have a look here and see what happened. Why? Because news is one thing and the reaction is another. So there's Jerome Powell's comments. There's the move back up. You would barely even know that this is because of Jerome. So I think what's important for us to keep in mind is that our bull and bear thesis here has told us that, again, monthly bottom is in. We're holding the monthly bottom. Peak hawks. We heard more hawkishness from Jerome Powell today. He's getting more and more and more hawkish. And geopolitics. We heard about Russia saying that, right? Calling war crimes on me is pretty much a non-starter. This is terrible. What else is here? I don't know what else could literally happen. So it's getting increasingly difficult to latch onto the bear narrative when there is a lack of bearish follow through. And the only thing that's for sure is that nothing is for sure. That's the first thing Jerome said. The second thing he said was that the labor market is very strong. Inflation is too high. And he is talking about coordinating the perfect soft landing. In terms of the labor market being very strong, what it means is that the JOLTS jobs openings are at roughly 12 million, and there's 4 million people who are looking for work. So for every one person looking for work, there's 3 jobs. And if they're starting to feel the pinch and inflation is really high and they have to make money, they got 3 choices. They can go work at 3 different places. They're choosing not to. So that's why Jerome says that he can coordinate a perfect soft landing. Inflation accelerated suddenly, but will go away slowly. So again, that's the opposite of transitory. Market did not care. Ukraine creates tremendous uncertainty. I agree. The Fed can tame inflation without a recession. That's wishful thinking, in my opinion. As we move forward to here were 2 of the key charts that Jerome showed as he was talking. And if you're paying attention here, we can know where and why Jerome is creating his narrative. If we're not fighting the Fed, but actually understand what they're doing, this gives us what? An edge. And as you can know from the comments, which I'm sure will come through again today, people don't believe this. They're climbing the wall of worry. They're going to believe that we're bullish when we're at 500. Let them believe we're bullish at 500. They're going to miss out on the gains between now and then. So this is what Jerome showed us. Longer run expectations remain well anchored in the historical ranges, 3%. Why? Because that's what they expect to see happen. We're not at 4, we're not at 4.5 yet. If we get there, he said, I'm ready to do what it takes. The second thing shown us here is the soft landings. 3 soft landings, right? We are incredible at the Fed. We coordinate soft landings every time we do a perfect job. So here he's talking about how, again, those who don't understand history are doomed to repeat it. He's saying that I want to repeat what worked. I want to get a soft landing. And he has all this history to lean on. So he's telling us what he thinks he's going to do. Whether or not you agree with him, he is Sugar Daddy Papa Powell and he is Dr. Money. So what he says matters. As we look forward to here as well, what's really important is that when we look out to the 1 month area, we are looking for an average of 1.6%. So are we talking about, and then that's 30 days from Friday. Are we talking about going to 500 tomorrow, 500 next week? No, we're not even talking about going to 500 next month. 1.6% is the average, not 10, not 20. It's 1.6. So if we take the closing price from Friday, 444.5, and times it by 1.015 or 1.5%-ish, where do we land? 451. Let's actually put a 6 there. So where do we land? 451.6, back above 450. So we're not talking about being at 400 here. And the reason why this matters is because what I laid out as my new base case is that we go up, we come back down, and then we grind up. What does that mean? Well, roughly 4 bars from here or a month out, maybe we're going to be a little bit higher. Where? I'm talking about this head and shoulders neckline, which corresponds with 454.05. So 452, 454. Does it really matter? In my opinion, no. Why? Because again, when we look at the average, it tells us that it's 1.6. However, if we're not red, we're likely going to be what? Pretty nicely green. Cool. What else have we got here? Fear and greed index. So we're throttling here at 37. So what does that mean? The market's still scared. It means there's still fear out there, but we're not seeing the negative follow through. Bullish. Looking at the heat map. This is where I think we really got a test today. The trades that were working were energy, like oil, wheat, gold, uranium. What? That's your zombie apocalypse portfolio. And what didn't care? Everything else. It's basically unchanged. You look here at the last 1 week. How are you going to tell me we're in a bear market right now? Again, short term, if they were going to sell off and they're thinking, oh my God, this is so high. There's so much, it's too high. They should have ripped these things down, pummeled them, and covered. They did not. So why not? Maybe there's some evidence we're actually bullish. Now let's look forward to our key dates. So we got 2 of these out of the way. We got Christine Lagarde and Fed Bostic speaking this morning, both pretty hawkish. Fed Chair Jerome Powell came in with a big hawkish comment as well. Tomorrow, we've got a plethora of Fed speakers. We got Christine Lagarde speaking. Then we got Fed Chair Williams. Again, most important speaker for tomorrow. It's part of the Troika. Then we got Fed Chair Daly, Fed Mester, and then Fed Daly. I think that's a duplicate. I'm sorry. Then we got Powell again on Wednesday to finish it all off. Sorry, that's Daly on Wednesday with Powell. Then we got Waller and Bostic again, and then Joe Biden with a NATO meeting on Thursday. So what does that mean? It means that The biggest potential moving event for the week is already underway, and we barely moved. So let's look back to here again. Why would we be bullish? Why would we be bearish? Let's read these one by one, and we'll see whether or not we're seeing any evidence that tells us that there's a reason to change here. So again, monthly bottom's in. Let's look at the monthly bottom here on SPY. Oh my goodness, it's holding. It's actually right near the high of the candle. It's like you wouldn't even know that today happened. No, we're down by 22 cents on a $400 stock. Who cares? Peak hawk in geopolitics. What did Jerome say today? I'm ready to go beyond the neutral rate. I'm ready to hike 50 basis points per meeting. He did not talk about adjusting the Fed funds rate, though. And the reason why it also matters is because when you look at the FOMC calendar, which means if we actually understand when the Fed meets and what they do, there is no asterisk here beside May. What does that mean? There is no summary of economic projections. They are not going to revise the dot plot. When does that happen? In June. So in May, we could begin balance sheet runoff. Market has had time to digest that. We could also go 50 basis points in May, which we were supposed to do in March. What did the market do? It shrugged it off. It does not care. So if we go back to our wide bull and bear dates here, what this tells me is that, again, during the market, we had a headline from Russia before we opened up. Then we heard from Jerome, low, higher low, higher low, higher high. We got another higher high on the daily. So SPY formed another daily higher high and higher low with more hawkishness and more geopolitical tension. What's going on? What is going on? That's the question. What is going on? Because if we can't go down on bad news, what could good news do? Oh my goodness, it could be quite bullish. And what happens on Thursday? Maybe global peace. Fingers crossed. Why could we be bearish? The wheels are in motion. Peak cycle and inflation narrative. The bears should have taken control of the chart today. They did not. The pressure's been building up for the last 4 days. It released. They got it down, but barely. Uptrend test. Whatever. So this tells me that as of right now, the surprises both came in, right? We got a surprise into the NATO meeting. We also got a surprise that Jerome Powell was actually more hawkish than we originally thought, even as early as last week. Look over here to our base case now. Tina. Russia's doing a lot of talking. Let them talk, right? Let them talk. Let China talk. Over here in America, we're busy doing things. That's the difference here. So my base case is that there is no alternative. We see it today on the tape. And in terms of the test, up to 454, when we talked about the 1.5% gain 30 days out, we easily get the 454. So I still believe we're going to get there. When we look at the technicals in a moment, I'll show you the reasons why. Bulls and bears fought for direction today. Bulls still have the edge. OPEX to quarterly chop. It's underway. And then April relief rally on the quarterly chart. So there we go. There's no reason for me to think that anything has changed here to the base case. Does that mean that I'm correct? No. But as of right now, I'm seeing more evidence that we are bullish than that we are bearish. Now let's look at some technicals here. So we looked at the heat map, and I'll do this thing here really fast again too. So year to date, what's green? It's only energy. What's the theme for today? It's only energy. So the theme of year to date is the theme for today. However, did we get negative price action on the market? That is a solid no. Why? We basically closed unchanged. So if we're closing unchanged and the wheels are back in motion, where uranium is up, wheat is up, energy is up, what's going on? Well, look at the last 1 week. The gains are digesting and holding. In the last 1 week, the trend is pretty clear. Everything but energy. So if we're going to see more of the same, meaning more of the last 7 days or more of the last 1 day, that is likely going to be the short-term direction, in my opinion. So barring all this out, if they wanted to sell these off and everyone's like, oh my God, the moves last week were too big. Who was there selling? No one. And we still have fear, which means there's still cash on the sidelines. Everyone's talking about 450 being the key area. It's 1% off, basically. 5 more points. We're almost there. So again, I want to make sure this is very clear before we look at the charts here. And yes, I'm using the camera more. I think I fixed the issue. I had some issues with the Mac update. I'm running a virtual machine, so I apologize if sometimes the audio and video are not 100% correct. Drop me a comment if it continues. I want to make these videos as good as possible, and I appreciate your feedback. So in terms of the news versus the reaction to the news, we had another perfect storm of hawkish and bearish headlines today. We don't see the reaction on the chart. So if we don't see the reaction on the chart, and we potentially have global peace coming on Thursday. Again, fingers crossed. I'm not Nostradamus, but I really hope so. What if we get a massive bullish event on Thursday? And we've already had more bearish news to bake in before that happens. And Jerome Powell speaks again on Wednesday. If bad news can't take us down, make sure you know where you are wrong if you're still betting bear. Why? Look at the chart. Look at the weekly chart here. So what we noticed that we got a higher high and a higher low on the first trading day with a doji. A doji after a massive uptrend means indecision. Indecision after the biggest week since 2020. That seems bullish to me. Look on the daily chart. So we got our 3 white soldiers, right? 3 white soldiers and another green day. Why? Because we opened today at 444.34 and we closed at 444.39. We were 5 cents more bullish at the close than after the open. The market voted and digested and said, we don't really care what Jerome said. What's the alternative? Nothing. America's number one. So if Jerome Powell is ready to raise rates more aggressively, do 50 basis point hikes, is the feedback on the charts telling you today there's an alternative? It's telling you hell no. It's America. That's it. So look at the daily chart too. Higher high, higher high, higher high, higher high, higher high, higher low, higher low, higher low, higher low, higher low. I think that's bullish. I think. Could be wrong. I think it's bullish. All right. So again, hopefully you're understanding the sarcasm I'm trying to give to you here. Also trying something new here too, where we can look at the anchored VWAP going back to the all-time high. And it's actually low. It's below, which means people who bought since the all-time high to roughly where we are now, right? We're roughly in line here. Everyone's making money. So if everyone's making money and there's no more bearish news, wherever the average, we stop going down. Can we go up? I think so. So look here. Looks like we actually closed a little bit higher. I'm recording this right after the close, so just paying attention to that. Weekly chart tells us that we're pretty damn bullish. Let's look over here at QQQ. QQQ also agrees. Doji, right? It's throttling 350 here. Pretty bullish to me. And then I want to look at who were the leaders of yesterday and are they still the leaders of tomorrow? Aapl. Bullish, right? Couple more cents. That's a bull break. Another dollar. Closed up. Bounced off the 50. Bull AF. Look at Tsla. Boom. Broke the downtrend. Bullish. Made it as high as 942. Almost into the gap zone over here. Bouncing off the previous all-time high. Bullish. Look at NVIDIA. Right against the red line here. Closing up on the day. 1%. Higher high. Higher low. Throttling off the 50, bullish. Microsoft, inside bar, bounce off the 50, broke the downtrend, bullish. Google, bounce off the 50, higher high, higher low, broke the downtrend, bullish. Facebook, inside bar, bouncing off the green line, total piece of junk, but looking a little bit less trashy this week, maybe bullish. Interesting. So all I would say here is that I'm not trying to be, not trying to be like a dick, but what I'm trying to say is that if you're still bearish and you're seeing the evidence that I've tried to lay out that's as clearly bullish as I could make it, please make sure you understand what your course of action is going to be if you know that you are wrong. Know where that level is and know where you're going to stop out, your stop loss. A stop loss stops you from losing more. If you're curious on watching more about my bull thesis, I made a very long video this last weekend, which should queue up here in a moment. And you can watch my bull thesis of 2022 right here. Click on it. You're going to enjoy it. Thank you for watching. I'll see you tomorrow.